You're watching Bitcoin drop below $90,000 for the first time in 7 months, and you're sitting there thinking, should I sell? Should I buy more? Is this the big one? And meanwhile, your friend who bought at $120,000 is texting you in all caps asking if he should panic. Look, I get it. I've been exactly where you are. And here's what makes this moment so frustrating. Every single person who's gone through a Bitcoin crash thinks their crash is unique. They think this time, it's different. But here's the thing that most people don't realize. It's never different. It just feels different. My name is Tom, and I spend way too much time thinking about Bitcoin crashes, market psychology, and why smart people make the same mistakes over and over again. If you're someone who's holding Bitcoin right now and feeling that pit in your stomach every time you check the price, or if you're on the sidelines wondering if this is your chance to get in, make sure to hit that subscribe button and give this video a thumbs up if this helps you out. So here's what I did. I analyzed every major Bitcoin crash since 2011. And I'm not talking about the 20% dips that happen every other month. I'm talking about the real crashes. The ones that made people question whether Bitcoin would survive. The 70%, 80%, even 99% drops. And what I found isn't just interesting. It's going to completely change how you think about what's happening right now. Let's start with the math, because the math doesn't lie. In June 2011, Bitcoin crashed 99% in a single day. It went from $32 to literally 1 penny. 1 penny. Now, you might be thinking, well, that was early days. That doesn't count. And you're wrong. It absolutely counts because it established the pattern. In April 2013, Bitcoin crashed 83%, from $260 to $54. The Mt. Gox exchange couldn't handle the volume, the system crashed, hackers attacked, and everyone panicked. December 2013, 50% drop overnight when China banned Bitcoin, from $1,150 to $575. Here's where it gets really interesting. December 2017 to December 2018, Bitcoin peaked at $19,783. 1 year later, it was at $3,200. That's an 84% drop. And this wasn't some quick flash crash. This was a slow, grinding, soul-crushing decline that lasted an entire year. March 2020, the COVID crash. Bitcoin lost 50% of its value in 2 days. It went from $10,200 in February to under $4,000 in March. May 2021, Bitcoin hit $64,000 in April. By July, it was at $29,000, 53% gone in 11 weeks. And now we're here. November 2025, Bitcoin peaked at $126,198 in October. As I'm recording this, it's trading around $87,000. That's a 31% drop in 6 weeks. Bitcoin has lost over $600 billion in market value. Now, you might be thinking, okay, Tom, so Bitcoin crashes. We know this. What's the pattern? Here's what most people don't realize. Every single one of these crashes follows the exact same psychological playbook. And once you see it, you can't unsee it. Phase 1 is what I call the euphoria multiplication. This is when Bitcoin isn't just going up, it's going up fast enough that people who don't understand Bitcoin, who've never bought Bitcoin, who think Bitcoin is fake internet money, suddenly they're asking you how to buy it. Your uncle at Thanksgiving, your hairdresser, the guy at the grocery store. In 2017, Bitcoin went from around $2,000 in July to nearly $20,000 by December. That's a 10 times increase in 5 months. In 2021, it went from $10,000 in September 2020 to $64,000 by April 2021. In 2024 and 2025, it went from around $43,000 in January 2024 to $126,000 in October 2025. Here's the math that kills people. When Bitcoin is at $2,000 and someone tells you it's going to $10,000, you think they're crazy. When it hits $10,000 and someone tells you it's going to $50,000, you think maybe they're right. When it hits $50,000 and someone tells you it's going to $1 million, you think they're a genius. This is called recency bias, and it destroys more wealth than any other psychological factor in investing. Your brain literally rewires itself to believe that whatever just happened will keep happening. Phase 2 is the catalyst nobody saw coming. And here's what's fascinating. The catalyst is never the same, but the result is always identical. 2011, the Mt. Gox hack. 2013 April, system overload and DDoS attack. 2013 December, China bans Bitcoin. 2017 to 2018, combination of profit-taking, regulatory fears, and the realization that Bitcoin couldn't process enough transactions. 2020, global pandemic. 2021, Elon Musk reverses Tesla's Bitcoin acceptance. China cracks down again, Environmental concerns explode. 20? 25? Pick your poison. It's either Trump's trade war with China, or it's the Federal Reserve not cutting rates like everyone expected, or it's just plain old profit-taking after hitting $100,000 for the first time. But here's what you need to understand. The catalyst doesn't matter. The catalyst is just the excuse. What actually causes the crash is leverage. Let me explain this because it's crucial. When Bitcoin is going up, exchanges will lend you money to buy more Bitcoin. This is called margin trading or using leverage. You can put up $10,000 and borrow $90,000 to buy $100,000 worth of Bitcoin. If Bitcoin goes up 10%, you don't make $10,000. You make $10,000 on your $100,000 position, but you only put up $10,000. So you just made 100% return. Your $10,000 is now $20,000. But here's the problem. If Bitcoin drops 10%, you don't lose $10,000. You lose $10,000 on your $100,000 position, but you only had $10,000 to begin with. You're now at zero. Actually, you're worse than zero because the exchange will automatically sell your Bitcoin to get their $90,000 back. This is called liquidation. According to CoinGlass data, in October 2025, during the flash crash, $530 million in leveraged positions were liquidated in a single day. The next day, $366 million more. When prices start dropping and leveraged traders get liquidated, their forced selling pushes prices down further, which causes more liquidations, which pushes prices down more. It's a cascade. And this cascade is what turns a 5% dip into a 30% crash. Here's the specific number that should terrify you. In the 2021 crash, over $1 trillion in value was wiped from the global crypto market in a single week. Not a year, a week. Phase 3 is what I call the demoralization grind. And this is where people's lives actually get destroyed. Because here's what happens. Bitcoin crashes 30% in a few weeks. Everyone's freaking out. But then it bounces back 10%. And you think, okay, that was scary, but we're recovering. Then it drops another 20%, then bounces back 5%, then drops 15% more. This is what happened from December 2017 to December 2018. It wasn't a straight line down. It was a staircase of hope and despair. Every time it bounced, people thought the bottom was in. Every time it dropped again, more people gave up. The 2017 crash took Bitcoin from $19,700 to $3,200. But it didn't happen overnight. It took 12 months. 12 months of watching your portfolio bleed out. 12 months of your friends and family asking why you're still holding that internet funny money. 12 months of reading headlines about how Bitcoin is dead. And here's the really brutal part. The people who bought at the top, the ones who got in at $18,000 or $19,000, they held through the first drop to $15,000, thinking it would bounce back. They held through $12,000, thinking they couldn't sell at a loss. They held through $8,000 because they were already down so much that selling seemed pointless. And then at $4,000, with a 79% loss, they finally gave up and sold. Right before the bottom. This is called capitulation, and it happens at the end of every major crash. The last holdouts, the true believers, the ones who swore they'd never sell, they finally break, and that's usually when the bottom happens. Now, you might be thinking, okay, Tom, so what makes this time different? Because everyone says this time is different. And you're right to ask, because something is legitimately different this time. But it's not what you think. In January 2024, the United States approved Bitcoin exchange-traded funds, ETFs. For the first time ever, regular people could buy Bitcoin through their normal brokerage accounts, their retirement accounts, without having to figure out how to use a crypto exchange. These ETFs bought tens of billions of dollars worth of Bitcoin in 2024. BlackRock, the largest asset manager in the world, launched a Bitcoin ETF. Fidelity launched one. State Street, major institutions that manage trillions of dollars in assets, by October 2025, spot Bitcoin ETFs held around $650 billion worth of Bitcoin. That's enormous. And here's what's fascinating. This should have made Bitcoin more stable. More institutional money, more sophisticated investors, less volatility. Right? Wrong. What actually happened is that these institutions bought Bitcoin all the way up to $126,000. The typical ETF investor's average purchase price is around $90,000. Which means when Bitcoin dipped below $90,000 in November 2025, the average ETF investor went underwater. They were losing money. And according to Bloomberg data, these same ETFs had consecutive daily outflows of $530 million and $366 million. Institutional investors were panic selling, just like retail investors always have. Here's another thing that's different. Michael Saylor's company, Strategy. formerly known as MicroStrategy. This company has bought 650,000 Bitcoin. That's 3% of the entire Bitcoin supply that will ever exist. They bought it with borrowed money. Billions and billions of dollars in debt. Their average purchase price is around $74,433 per Bitcoin. Right now, Bitcoin is trading at around $87,000. If Bitcoin drops to $70,000 or below, Strategy is underwater on their entire Bitcoin position. A company that has borrowed billions of dollars to buy Bitcoin would be sitting on a paper loss. Now, Michael Saylor has said he will never sell Bitcoin. Never. But here's the thing. Strategy only generates about $116 million in revenue per quarter from their actual business intelligence software. If they start having trouble meeting their debt obligations, they might not have a choice. And if Strategy has to sell even a small amount of Bitcoin, the psychological impact on the market would be catastrophic. Because their entire strategy has been based on the idea that you never sell Bitcoin. If they sell, it breaks the narrative. And when narratives break in investing, prices collapse. Here's where it gets really interesting. Let's talk about the 4-year cycle. Historically, Bitcoin has followed a predictable pattern. Every 4 years, the Bitcoin halving occurs. This is when the reward that miners get for processing Bitcoin transactions gets cut in half. It's built into Bitcoin's code. It reduces the supply of new Bitcoin entering the market. The last halving was in April 2024, and historically, Bitcoin peaks about 18 months after a halving. April 2024 plus 18 months is October 2025. Bitcoin peaked in October 2025 at $126,000. The pattern held perfectly, but here's what's different. In previous cycles, after Bitcoin peaked, it would drop 70 to 85% and then enter what's called a crypto winter. A long, brutal period where prices stay depressed for years. The 2013 crash led to a 2-year recovery period. The 2017 crash led to a 3-year recovery period. But this time, some analysts think the 4-year cycle is breaking. Why? Because of those ETFs. Because of institutional adoption. Because Bitcoin is now a macro asset that trades based on Federal Reserve policy and interest rates and geopolitical events, not just on its own internal supply dynamics. Matt Haugen, Chief Investment Officer at Bitwise Asset Management, says he thinks the 4-year cycle is over. Other analysts disagree. They think we're about to enter another brutal, multi-year bear market. Here's what the data actually shows. Bitcoin is now down 31% from its peak. In the 2013 crash, it eventually dropped 50%. In the 2017 crash, it dropped 84%. In the 2021 crash, it dropped 53%. If this crash follows the same pattern as 2017, Bitcoin would drop to around $20,000. If it follows the 2021 pattern, it would drop to around $59,000. Elliott Wave analyst John Glover is predicting Bitcoin will drop to between $70,000 and $80,000, and that this bear market will last 12 to 15 months, potentially until late 2026. Now, here's what most people don't realize, and this is the part that changes everything. The psychological shift that happens during these crashes isn't about the money. It's about identity. When Bitcoin is going up, owning Bitcoin makes you feel smart. You're early. You're ahead of the curve. You understood something that other people didn't. Every time your friend asks about Bitcoin and you tell them you bought it at $30,000 and it's now at $80,000, you get a little hit of validation. You feel like a genius. But when Bitcoin crashes, that identity crumbles. Now, you're not a genius. You're the person who fell for internet funny money. You're the person who bought at the top. And the psychological pain of losing that identity, of going from feeling smart to feeling dumb, is worse than the financial pain of losing money. This is why people hold through crashes even when they should sell. It's not about the money. It's about not admitting they were wrong. And this is why people sell at the bottom. Because at some point, the psychological pain of holding on to an identity that's been proven wrong becomes greater than the financial pain of taking a loss. Here's the really interesting part. The pattern isn't just in the price, it's in the language people use. At the top of every bubble, you hear phrases like, "This time is different," "The old rules don't apply," "It's going to $1 million," "You're going to regret not buying." At the bottom of every crash, you hear phrases like, "Bitcoin is dead," "I knew it was a scam," "I'm never touching crypto again." This is why we need regulation. Right now, in November 2025, we're in the middle phase. People are still hopeful, but scared. They're still saying, this is just a correction, we've seen this before, zoom out. But if Bitcoin drops another 20 or 30%, those phrases will change. They'll shift to the bottom of the cycle phrases. And here's the brutal truth. By the time everyone agrees that Bitcoin is dead and it's never coming back, that's usually the best time to buy. But almost nobody does it because the psychological pain is too intense. Now you might be thinking, okay, Tom, what do I actually do with this information? Because knowing the pattern doesn't help me if I don't know what action to take. Fair question. Let's talk about what you actually do right now. First, you need to figure out which category you're in. And there are only 3 categories that matter. Category 1. You bought Bitcoin recently, you're down money, and you're freaking out. Maybe you bought it $100,000. Maybe you bought it $110,000. You're looking at a 10% or 20% loss, and you're wondering if you should cut your losses. Here's what you need to do, and you're not going to like it. You need to ask yourself one question. Do you believe Bitcoin will eventually be worth more than what you paid for it? Not next month, not next year, but eventually. In 5 years? In 10 years? If the answer is yes, you do nothing. You don't sell, you don't even look at the price. Because here's the math. If you bought Bitcoin at $110,000 and you believe it will eventually be worth $200,000 or $500,000 or whatever number you think it will reach, then selling now locks in your loss. You're guaranteeing that you lost money. But here's the really important part. You also don't buy more. Not yet. Because we don't know if the bottom is in. Bitcoin could drop to $80,000 or $70,000 or $60,000. Buying more now when you're already down is called averaging down, and it only works if you have conviction and capital. If you're freaking out right now, you don't have conviction, so you do nothing. If the answer is no, you don't believe Bitcoin will be worth more than what you paid for it, then you sell immediately. You take the loss. You move on. Because hope is not a strategy, and holding on to something you don't believe in just because you don't want to admit you made a mistake is how people destroy their financial lives. Category 2. You bought Bitcoin a while ago, you're still up money, but you're watching your gains evaporate. Maybe you bought at $30,000 or $40,000 or $50,000. You're still profitable, but your $200,000 position is now worth $150,000 and you're watching it drop every day. Here's what you do. You take some profit. Not all. Some. Maybe 20%. Maybe 30%. Enough that if Bitcoin keeps dropping, you've locked in real gains. Enough that you can sleep at night. Because here's the thing that nobody tells you. Paper gains aren't real until you sell. If you bought Bitcoin at $30,000 and it went to $126,000, you didn't make money. You made paper profits. If it drops back to $30,000 and you never sold, you made $0. The smart move is to de-risk. Take some chips off the table. Lock in some gains. Then you can hold the rest with conviction because you know you've already won. Category 3. You don't own any Bitcoin and you're watching this crash, wondering if this is your opportunity to get in. Here's what you do. You wait. But you also prepare. You figure out exactly how much money you're willing to lose on Bitcoin. Not how much you're willing to invest, how much you're willing to lose. Because there's a real possibility that Bitcoin drops to $70,000 or $60,000 or $50,000. There's a real possibility it takes 2 years to recover. So you figure out that number. Let's say it's $10,000. You're willing to lose $10,000 if Bitcoin goes to zero. Now, you don't invest all $10,000 at once. You dollar cost average. You buy $1,000 worth now at $87,000. You buy another $1,000 if it drops to $80,000. Another $1,000 at $75,000. Another $1,000 at $70,000. This way, you're not trying to time the bottom. Because nobody can time the bottom. You're building a position at a range of prices. And if Bitcoin does eventually recover, your average purchase price will be somewhere in the middle. But here's the really important part. You only do this if you can afford to lose that money. Not just financially, psychologically. If watching Bitcoin drop is going to keep you up at night, if it's going to stress you out, if it's going to make you check the price every hour, then you can't afford to invest. Even if you have the cash. Now let's talk about the bigger picture. Because here's what this crash is really teaching us. Bitcoin crashes happen. They always have. They always will. Bitcoin crashed 99% in 2011. It recovered and hit new all-time highs. It crashed 84% in 2018. It recovered and hit new all-time highs. It crashed 53% in 2021. It recovered and hit new all-time highs. Every single person who bought Bitcoin and held it for at least 4 years has made money. Every single person who bought at the top and panic sold at the bottom has lost money. The pattern isn't just in the price. It's in human behavior. People get greedy when prices are high. They get fearful when prices are low. They buy at the top because they don't want to miss out. They sell at the bottom because they can't handle the pain. Here's what you need to understand. Bitcoin is not a get-rich-quick scheme. It never was. The people who made life-changing money on Bitcoin bought it years ago and held it through multiple crashes. They didn't time the market. They survived the market. Right now, Bitcoin is down 31% from its peak. Some people are calling this a correction. Some people are calling this the start of a multi-year bear market. Nobody actually knows. But here's what we do know. Based on every historical Bitcoin crash, this is not over. Bitcoin typically doesn't bottom after just 30%. It keeps dropping. It has these false recoveries that get people excited, then it drops again, it breaks people's spirits, it makes them give up. And then, when almost nobody believes in it anymore, it starts to recover. The question isn't whether you believe in Bitcoin. The question is whether you can survive the process of Bitcoin proving you right. Because here's the truth that most people don't want to hear. If you can't handle watching your Bitcoin investment drop 50% or 60% or 70% without selling, then you shouldn't own Bitcoin. It's that simple. Bitcoin is the most volatile major asset in the world. It's not going to change. The volatility is a feature, not a bug. So here's my challenge to you. Stop checking the price every day. Stop reading every news headline about Bitcoin. Stop asking your friends what they think is going to happen. Nobody knows what's going to happen. Instead, figure out your conviction level, figure out your risk tolerance, make a plan, and then stick to that plan regardless of what the price does. If you believe Bitcoin will eventually be worth more, then crashes are opportunities to buy at a discount. If you don't believe in Bitcoin, then crashes are confirmation that you should stay away. But the worst possible thing you can do is sit in the middle. Hope that it goes up, panic when it goes down. Buy at the top because you're excited. Sell at the bottom because you're scared. That is how you lose money in Bitcoin. That is how you lose money in any investment. The pattern is clear. Bitcoin crashes. It recovers. It crashes again. It recovers again. Each time it crashes, people say this is the end. Each time it recovers, people say this time is different. And the cycle repeats. We're in the crash phase right now. And based on history, it's probably going to get worse before it gets better. But it will get better. It always has. The question is whether you'll still be holding when it does. So figure out your plan, make your decision, and then commit to it. Because the only way to lose in Bitcoin is to let your emotions make your decisions for you. Now, if this video helped you understand what's actually happening with Bitcoin right now, hit that like button, subscribe to the channel, share this with someone who's freaking out about their Bitcoin investment. Because the more people who understand this pattern, the fewer people will make the same mistakes that have destroyed wealth in every previous crash. And if you want to learn more about how to actually build wealth instead of just chasing prices, check out my other videos where I break down the psychology and math behind every major investment decision. Thanks for watching. I'll see you in the next one.